Simple explanation, they need to print money. The US needs money. If you look at what's happening to their debt ceiling, they need to print in order for them to fulfill their debt obligations and also all of the other expenses that they're having. Please do note the problem of the US right now is they're actually spending more than what they're earning. Before we continue with the video, I'd like to invite everyone to Investment Conference 2023. This is an event that we co-founded about 10 years ago with the goal to educate people about investing and different investments that are out there. We have a lot of speakers from Randall Chongson, Rex Mendoza, David Lichu, Alvin Ang. But what's interesting for this year also, since I've been pushing and I've been a very, very big advocate of Web3 cryptocurrencies and NFTs, we're adding crypto into the mix. If you want to venture into crypto and NFTs, check out the link down below. It's happening May 27, 2023 at Samsung Hall. We're gonna have 1,000 people, 1,000 investors joining us. So I hope to see you there. See the links below and back to the video. Hey guys, so in this video, I want to talk about the Fed raising rates and how it will impact the markets and what should you do as an investor based on this piece of information. As you all know, we can't control the economy. We can't control how central banks decide on policy. But what we could do is base our actions from a risk management perspective and invest accordingly based on our trading, investment, and financial plan as well. For those who don't know or you haven't heard it yet, the Fed raised rates a couple of days ago to its highest level for the past 16 years. So please do note this. It's 2023 right now. The last time it hit this high of a level was 2007. I was just 2 years detached from college when rates were this high. So please do note that they raised rates by 0.25%, so which brings rates to about 5 to 5.25%. But what's interesting about that is, for those who remember, somewhere around March 2022, rates were so close to zero. Over a span of a year plus, they massively increased rates at an unprecedented rate. And I think that's one of the biggest criticisms about it, because they kept saying that inflation was transitory, that inflation was not a problem. That's why they raised rates too late. And that's why every time you do something that's a bit accelerated also, it poses a bit of a threat. When you do something accelerated rate, it has its repercussions. The Fed also hinted that this may be their last rate hike, which I think has merit also, that if you look at data, if you look at how inflation is also, at least for this cycle, I think we've gone through the worst already. And if you look at it also, it looks like business as usual already. It's easier already for people also to transport things. The Ukraine and Russia war has been there for a year already, meaning businesses already have also pivoted. There, some bottlenecks also have already been addressed as well. And we are at a better position. I mentioned this in previous videos that watch out for inflation, because as that continues to wind down also, there will be an impact also already in interest rates, and how interest rates would go would impact the stock market. As it impacts stock market, it would impact also the crypto market as well. Why is this significant also? As inflation continues to wind down, it's not just them pausing the rate hikes, but I do believe also in the midterm, we could possibly see rates start to go down as well. Please do remember this. For quantitative easing, simple explanation, they need to print money. The US needs money. If you look at what's happening to their debt ceiling, they need to print in order for them to fulfill their debt obligations and also all of the other expenses that they're having. Please do note the problem of the US right now is they're actually spending more than what they're earning. They're actually spending more than what they're making. So think about that from your own personal finances. You don't have enough money to be able to take care of your expenses. But for them, they have the ability to either borrow more, or since they have an unlimited money maker, they could just print and print and print and print. However, for them to be able to do that, they have to do that when interest rates are low. And that's why I do believe that should they pause the rate hikes, it would be followed also by rates being decreased. I think that's something that would happen steadily also. How does this impact the stock market and also the crypto market? You have to realize this: when rates are higher, tons of investors, especially the large funds, the large institutions, the ones that are very, very traditional and conservative, would move their funds to bonds, into fixed income assets. And that's what we saw, because if you are a large institution or fund and you're handling millions of dollars or billions of dollars, a bump in interest rate is free money for you. You get to have the ability to earn interest without any risk with the same amount of money. And the higher the rates go, the less attractive the stock market is to large funds, and in the same way also the crypto market, because it poses a larger amount of risk. However, when they start dropping it, when it comes to a point in the future, they start bringing down rates because they need to print money. All of the money that used to go in this fixed income assets because rates were better, they're gonna start thinking the rates are not as attractive anymore and the stock market looks very cheap right now. I may want to move and transfer my positions in the bond market to the stock market, because the stock market will give me a relatively larger amount of upside, given that what the bond market is giving me may not be as attractive. And please do note also, one of the reasons why the stock market and the crypto market pushed up in 2020 and 2021, because there was unlimited printing by the Fed. So when they start printing, there will be an infusion of liquidity into the markets. It's going to go to assets, and it's going to inflate asset prices again. And whatever you saw in 2020 and 2021, when there's a larger amount of liquidity, people start buying, and when people start buying, you see prices move up once again. So everything that I've mentioned before, that this is all cyclical, is primarily also because it's really cyclical. They can't really increase interest rates forever, and when it hits a certain point, they'll have to decrease it, and they start printing again. Then asset money starts to flow from the bond market to the stock market, and if the stock market also gets better, the crypto market will also get better as well. So please do note this, since no one has a crystal ball also, we don't know what may happen over the next few months that may also derail the economy. And as the economy also gets derailed, there may be certain measures also that the Fed or the government or the US government would do as well. But if everything stays on track, everything stays on course, I do believe that this could be the last rate hike that we could possibly see before they start bringing interest rates down. And as they start bringing interest rates down, the money printer would happen, which is good for the stock market. And you could also have a sense that it will also trickle down if you're watching and trading and investing Philippine stocks. I do believe it will also trickle down there. The Philippine market is a very, very small market compared to other capital markets in the world, but the sentiment alone, I think, will also spill over to our shores. And for those that are into crypto, please do note that Bitcoin follows Nasdaq and Ethereum follows Bitcoin, and majority of the altcoins that we have, except for some of the meme coins that pumped over the past few days, but majority of the altcoins that we have, a more volatile version of how Bitcoin and Ethereum is as well. This is something that we have been waiting for also. If you watched my previous videos, I said that I'm not so sure when will this rate hikes end. But I do believe that we're nearing that. We're nearing the end, and the fact that they're actually hinting that they're gonna stop it is something that's worth noting. And if you want to look at reversal from an economic perspective, which could be also seen from the stock market, which is a forward-looking indicator of the economy, you may see it move faster, larger strides upward as the economy gets better, as rates start to go down, as rate hikes will probably stop and then eventually go down, and then you see the money printer go up once again. So I hope you guys got a lot from this, and this just puts everything into full circle on how things started due to inflation a couple of months ago, which was predicated by the massive printing in March 2020, and we're nearing the end of this cycle. So that's it for now. I hope you guys got a lot from this. This is marvingermo. If you want to know more about the stock market and the crypto market, check it out down below. We have books, we have seminars, and everything else in between. I hope that this is something that gives you as much value as possible. That's it for now. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.